So friends, we will be discussing the indirect tax amendments proposed in budget 2022-23. We will be discussing firstly the GST amendments and thereafter custom amendments. The first amendment is in section 16 of the CGST Act. Friends, we all are aware section 16 of the GST Act prescribes the conditions for availment of credit, such as there should be a valid tax invoice or a debit note for taking of credit. Goods should have been received in the premises for availment of credit. Another condition under section 16 is section 16(2)(c), that is, supplier should have paid the tax to the government. So there are various conditions which are prescribed under section 16. With effect from 1st January 2022, section 16(2) subclause A was already inserted, which provided that the details of the invoices or debit note must be furnished by the supplier in its outward supplies, that is GST1, and the same should be communicated to the recipient. Then only credit will be available. So one more condition was already added. So we had a condition called section 16(2)(c), which provided that the supplier should pay the tax to the government. Section 16(2)(a), which provides that the supplier should upload the invoice on the portal and it should be recipient in GSTR2B. Rule 36(4) was also amended. Now, what they have done in this budget is that they have introduced one more condition for availment of credit apart from whatever conditions which we just now discussed. The newly inserted clause BA has been proposed, and the same is as under: the details of input tax credit in respect of the supply communicated to registered person under section 38 has not been restricted. So they have introduced a new clause which says that the details of the input tax credit which have been communicated to you under section 38, and they have also substituted section 38, which we will see in another 2 minutes. The whatever details are being communicated to the recipient in GSTR2B under section 38, that particular input tax credit should not be restricted. So that is one of the conditions which has been imposed. And let us now see what is section 38, and then we will see the interplay between section 16(2)(BA) and section 38. Section 38 has been substituted, and it provides that the details of the output supplies furnished by the supplier should be made available electronically to the recipient in the manner prescribed, and this is an enabling provision for GSTR2B. So section 38 is just an enabling provision which provides that the supplier details will be auto-populated to the recipient details in GSTR2B. And now what they have done is that in GSTR2B, they have created two categories. First, ITC available. Second, ITC not available. And in what are the circumstances wherein ITC will not be available? That they have provided under section 38 subsection 2. There are 6 cases which they have provided that ITC will not be available to the recipient, even if it is auto-populated in GSTR2B. I repeat, very important. Even if you are able to see the invoice on your GSTR2B, still in 6 cases, ITC will not be available. Case number 1. Details of supplies furnished by the registered person within such period of taking registration as may be prescribed. So we await clarity on this particular serial number, but prima facie it seems, because they will prescribe it. If a supplier has taken a fresh registration and all of a sudden they are issuing huge number of invoices of huge amount, then they may restrict the credit for such kind of suppliers. This is even one of the tools which they use today also in BIFA to check fake invoicing, etc. That some companies take new registration and immediately start raising huge number of invoices with huge amount, etc. at the initial stage of registration itself. So it prima facie seems that that is the intent, but we await clarity how it will be implemented and what all will be covered in this. Second restriction: supplier has defaulted in payment of tax and such default has continued for prescribed period, meaning thereby that under this condition, the portal will check whether the supplier is discharging tax liability in GSTR3B, whether he is paying tax under GSTR3B, and whether he is filing GSTR3B or not. If GSTR3B is not filed by the supplier, then the invoice even if it is auto-populated in your GSTR 2B, it may come out with the restriction credit not available. So they may provide restriction to those kinds of suppliers who are not filing their GSTR 3B. And so this is very, very important that my reconciliation is not only restricted to 2B versus books, that the invoice is auto-populated in 2B. That is not sufficient. I need to check whether the supplier is also regularly filing GSTR 3B or not. So that is the additional check which we all need to impose, which we all need to implement while we are doing our inward reconciliations with GSTR 2B. So one of the restrictions which they have imposed is if supplier is not filing 3B, I can restrict your credit. Next condition, that's restriction which they are imposing. Even if supplier is filing GSTR 1 as well as 3B. However, if the output tax payable in as per GSTR 1 is more than the tax liability paid through GSTR 3B, and such difference exceeds the prescribed limit, then they may put restrictions or availment of credit. So we have seen in past, there are various suppliers who file their GSTR 1, say with the turnover, with the tax liability of 1 crore rupees. But when it comes to filing of GSTR 3B, it's only 5 lakh rupees, 10 lakh rupees. So 3B, tax liability 10 lakhs. GSTR 1, tax liability 1 crore. Huge gap. But when you see your GSTR 2B, what will you see? Invoice is auto-populated. GSTR 3B is also filed. So you see that the supplier is compliant. Now, that is not sufficient. The portal will give you a report stating the difference between GSTR 1 filed by the supplier vis-a-vis GSTR 3B filed by the supplier in terms of percentage. And this is already implemented in the portal in last 1 week. So that report has started coming. So based on that report, the portal will themselves put a restriction on availment of credit. And now what will be the prescribed limit for such difference is yet to be known and will be soon shared by the government. Next, very, very important restriction which have been imposed under Section 38. They are saying supplier has filed GSTR 1, it is auto-populated in your 2B, fine. Supplier has filed GSTR 3B, fine. The difference between GSTR 1 and 3B, no difference. Everything is reconciled. Fine. However, if the tax paid by the supplier in GSTR 3B is out of input tax credit, which is not eligible. That is, if the supplier is discharging its output tax liability in GSTR 3B using those credit, which is not auto-populated in his GSTR 2B. And there is a difference between his credit in 3B and his 2B credit. And that difference exceeds the prescribed limit. In that situation also, they can mark the invoices of such supplier as non-creditable invoices and can restrict the credit on the invoices issued by such supplier. So very, very important amendment. We are going one step back. It is not that I have to do my reconciliation and check whether my 2B and 3B is getting reconciled or not. I take credit on the basis of 2B. Fine enough. I also check whether he is filing GSTR 3B or not. Fine enough. I also check that there is no difference between his GSTR 1 and 3B. Like there should not be much difference. If there is much difference, they will put restriction under serial number 3. Apart from that, they are coming out and moving backwards, saying that even everything is reconciled. His GSTR 1 is filed, 3B is filed, no difference between 1 and 3B. But if he have paid tax using wrong ITC, if there is a difference of 2B versus 3B reconciliation in his books, in his returns, then also we can mark such supplier as invoices raised by supplier as non-creditable invoices. And it's a very, very big amendment. We are moving back to one stage, and it will be interesting to see how it will be implemented in the portal. Moving on to the next restriction, supplier has defaulted in discharging his tax liability in accordance with Section 4912. That is, ITC can be utilized up to a specified limit of discharging output tax liability. Friends, we are aware that under Rule 86B, it provides a restriction that certain taxpayers can use only credit up to 99% for discharging the output tax liability, and the remaining 1% has to be paid in cash. If somebody is violating that rule, not following that rule, and there are certain exceptions to those rules. So whosoever is falling under that rule and he's not following that rule, In that situation, they can bar the invoices raised by such suppliers as non-creditable invoices. So they have come out with all those restrictions, all these restrictions in section 38 of the GST Act, and have provided that even if your invoices are auto-populated in GSTR 2B, it is not sufficient that you will get the credit. Please check whether he is filing 3B or not. Please check whether the difference between GSTR 1 filed by him and GSTR 3B filed by him is within the prescribed time limit. If it is more, I will bar the credit. Next, also make sure that he is availing credit rightfully. There should not be inward reconciliation gap of in the books of the supplier. Whatever credit your supplier is availing in his books in his GSTR 3B, that should reconcile with his T2B. And there should not be much difference beyond the prescribed time limit. Burden on you. Next, you have to make sure if he is falling under Rule 86B, if he is covered under Rule 86B, then he is adhering to that rule in his return filing system. So availment of credit has become more stringent. It is very, very important for you to please amend all your contracts with the suppliers and ensure that if your credit is denied on account of all these reasons, etc., you are in a position to practically recover the money from them along with interest penalty, etc. So it is utmost important for all the taxpayers to rework the purchase order terms, work order terms, contractual terms with the vendors and ensure that you have sufficient safeguard clauses with the vendors. Because practically what will happen is that if vendor has uploaded the invoice on GSTR 1 and he is effectively paying tax in GSTR 3B also, he will definitely demand tax from you. He says, I have appropriated my details in GSTR 1, I filed my 3B, he will definitely demand tax from you. So down the line, it should not come that these suppliers have not discharged the liability, these suppliers have used wrong credit for availment of, wrong credit for discharge of tax liability, etc., leading to unnecessary burden on you. So make it clear that if in GSTR 2B, your invoice is not creditable, make it clear in your contractual terms that whenever we will see the invoice auto-populated in my GSTR 2B, if the category of that invoice is ITC not available, we will not pay your GST amount. So we have to make sure your contractual terms are properly safeguarded to implement this section 38, which imposes big restriction for availment of credit, very big amendment. And most important, all these things are not in rules, etc. In last 4 years of GST implementation, we all have been taking argument for 2A, 3B mismatch, etc. that nothing is in the law. There is nothing in the law. Everything is in the rule, circular portal. Where is the act? Now, crystal clear. Please see, you have section 16(2)(c), which says supplier should pay the tax. You have section 16(2)(a), which says that supplier should upload the invoice on the portal and it should be communicated to you. Now we have section 16(2)(ba), which says that the invoice should be auto-populated and it should not be restricted under section 38. It is the section 38 which contains all these restrictions. So section 16(2)(c), 16(2)(ba), 16(2)(a), multiple sections to restrict your credit. Most important amendment. Moving on to the next amendment, changes in time limit. Friends, we are aware that for availment of input tax credit, for issuance of GST credit notes, or for rectification of in GSTR 3B or GSTR 1, we have a time limit prescribed under the GST law, and that particular time limit is due date of furnishing GSTR 3B of September month of the next financial year. Take an example for the financial year 2021-22. Whatever invoices I am receiving, I can take credit only up to due date of furnishing of 3B of September 2022 month. So I have to record those invoices maximum in my book by September month and take the credit in my September 3B, which I have to file within the due date, that is 20th October 2022. Similarly, we have such restrictions for issuance of credit notes and rectification in returns. Now, what they have done is that they have extended this time limit to 30th November. Instead of due date of furnishing of 3B of the September month, the revised time limit is 30th November of the next financial year, and it's a very welcome relief. Let us understand this amendment with the help of an example, and there is a big catch in this amendment. When we see 30th November, at a glance, it looks like whatever invoices I am recording by 30th November in my books, I will be in a position to take the credit. Is that so? Let us understand with the help of an example. Invoice is dated April 2021. I repeat, invoice is dated April 2021. What is the last date of availment of credit? The last date of availment of credit as per the revised timeline is 30th November. And how do you avail credit? Please note, friends, availment of credit under GST law is through filing of return, and it is not your book entry. It is not the date on which you are booking in your books of account. It is the date on which your return is filed, in which you are including this particular invoice. Now, since the last date for filing, availing the credit is 30th November, so practically for this particular invoice of April 2021, you can avail the credit maximum in October 2022 return. I repeat, you can avail the credit maximum up to October 2022 return, which you can at best file up to 30th November. Though due date is 20th November, even if you delay it and file up to 30th November, the credit will be available to you. So in fact, by virtue of this amendment, the relief is only of one tax period, one additional tax period. You have to include all these invoices in your October GST 3B and file it up to 30th November. It is not the case that you don't include these invoices in your October 2022 3B. You rather book these invoices in your 30th November date and then file your November return in 20th December. Credit will not be available because the due date of credit, availment of credit is the date when you are filing your 3B return. So it is your October return. So they have shifted it from September return to October return, and that October return you can file up to 30th of November. Very, very important amendment. And if we see the extract of 43rd GST Council meetings, friends, no amendment is proposed in GST law in budget directly. It has to be first approved by GST councils. And when we see the GST Council meetings, these meetings, the minutes of these meetings explain the rationale and reason behind each of the amendment. And when we take out the extract, they specifically says, I'm reading the extract as it is. Law committee has recommended that a fixed date, 30th November, be fixed for the same as it serves two purposes. In the portal, after the cutoff date, no amendment would be permitted. Second, it provides one more month to taxpayer. So it provides one more month to taxpayer. Similar implication we follow for issuance of credit note and rectifications of returns. So everything you can do up to October return that you have to file by November 2000, by 30th November 2022. Moving on to the next important amendment is substitution of section 53. Section 50 subsection 3 contains provisions for levy of interest in case of wrong utilization or wrong availment of input tax credit under section 4210. So the old provision, if we see section 50 is the section which provides for levy of interest. In section 50, we have a provision for levy of interest if there is a shortfall for output payment. But when it comes to wrong utilization of credit or wrong availment of credit, we only had section 50 subsection 3, wherein it was restricted that such interest will be applicable only in a limited situation of mismatch under section 42, that is double mismatch. There was no general provision for levy of interest on wrong utilization of credit or wrong availment of credit, etc. And there was a dispute whether if I wrongly avail the credit but don't utilize, whether interest applicable. If I utilize wrongly, whether interest applicable. What will be the rate of interest, whether 18%, 24%. Everything has been put to end. Government has come out with a retrospective amendment wherein they have substituted this section 50 subsection 3. And now the section read as under. Where the input tax credit has been wrongly availed and utilized, the registered person shall pay interest on input tax credit wrongly availed and utilized at such rate not exceeding 24%. And they have also introduced a notification where they have retrospectively put rate of interest as 18%. Thereby, the implication is as under. If you have wrongly availed input tax credit, but you have not utilized, the law is crystal clear, no interest applicable on you. Second, if you have wrongly availed and utilized the input tax credit, availed as well as utilized, and there is a revenue loss to the government, then interest is applicable. And what will be the rate of interest? Crystal clear, 18% and not 24%. Moving on to the next amendment. Friends, I am covering all my indirect tax amendments and I will be taking all the question and answers in the end. Rest be assured that each of your question will be answered in the end. You can keep on writing in the chat box. Moving to next amendment under section 41. In section 41, the earlier section 41 provided for provisional availment of credit. Now they have done away with this concept of provisional availment of credit. They have provided that the credit will be availed in your GSTR 3B based on your self-assessment. Further, they have provided that if you have availed the credit, but supplier has not paid the tax, very important, please listen. If you have availed the credit and the supplier has not availed the tax, then the same has to be reversed along with applicable interest in the manner to be prescribed. It is yet to be prescribed. So they have put specifically in section 41 that if you have availed the credit, but supplier has not paid the tax, you have to reverse the credit. However, a proviso has been added and it's a very, very welcome proviso. It provides that, provided that where the said supplier makes payment of the tax payable in respect of the aforesaid supplies, the said registered person may re-avail the amount of credit reversed by him in such manner as may be prescribed. Now they have provided with the opportunity to re-avail the credit. So what section 41 is saying that you have taken credit, supplier has not paid the tax, we will ask you to reverse the credit. In what manner they will prescribe it, what will be the procedure. However, in future, if they pay the tax, in such a situation, you will be in a position to re-avail the credit. So we will wait for the rules and more clarification from the government how this section 41 will be implemented. They have amended or omitted section 42, 43, 43A. All these sections provided for two-way flow. The earlier GSTR 1, 2, 3 model, which was emphasized during the implementation of GST. The entire section 37 to 43A has been restructured in a manner that there is no two-way communication concept. They have given GSTR 1, GSTR 3B, GSTR 2B legal sanctity. They have given 2B versus 3B reconciliations legal sanctity under the GST law, and entire provisions related to two-way flow has been deleted from the law. Moving on to the next set of amendments is under section 37 and 39. First, supplier would not be allowed to file GSTR 1 of the subsequent period unless the GSTR 1 of the previous tax period is filed. So if you have not filed GSTR 1 for this month, you will not be in a position to file GSTR 1 for the next month. Condition imposed under the Act itself. Next condition imposed under the Act itself. If I have not filed my GSTR 1, I will not be in a position to file my GSTR 3B. If for January month, I'm not in a position to file GSTR 1, I will not be in a position to file GSTR 3B. In condition imposed under the Act. And whatever condition, whatever amendments we are discussing, all those amendments are effective from the date of enactment of finance bill. However, this interest amendment is implemented retrospectively. This is retrospective interest, and all other amendments are from the enactment of the Finance Act. Another amendment is in section 54, wherein they have changed the time limit for availing the refund in respect of supplies to SEZ units or SEZ developers. Under section 54, there is a time limit that I have to apply refund within 2 years from the relevant date. And in case of supply to SEZ developers, they have changed that this relevant date will be the due date of GSTR 3B in which supplies to SEZ was made. So from that, you have to calculate this 2 years period. Another amendment has been imposed is in section 49, subsection 10. Earlier, this section provided for transfer of cash ledger balance from one head to another head within the same GSTN number. So you could have transfer from one head to another head within the same GSTN number. Now what they have proposed is that apart from whatever is available under the Act, they have said that you can now even transfer the cash ledger balance from one GSTN number to another, to different GSTN number, but under the same PAN. That is, you can transfer the cash ledger balance from one GSTN number to another GSTN number, but under the same PAN, that is between distinct person. However, please note, it is only the CGST or the IGST credit that can be transferred to the distinct person as CGST or IGST. You cannot transfer the CGST under the state tax head. So what you can transfer is only the CGST and the IGST part. A very important amendment, but practically it is not yet implemented in the portal, and it will take around 1 month to get implemented in the portal. Next is insertion of section 4912. The purpose of this section is to give an enabling power for the insertion of Rule 86B. Friends, we are aware Rule 86B deals with restriction of credit for payment of output liability. That is, the maximum credit which you can utilize is up to 99%. So that restriction was imposed only under the rule, and now they have inserted a section specifically to give this power to the government so that there is no dispute in future and nobody challenges the constitutional validity of Rule 86B. And then we have other miscellaneous amendment, like they have proposed late fees for filing of e-commerce returns of GSTR 8. Similarly, they have provided that composition dealers or normal taxpayers who are covered under quarterly schemes, etc., monthly they have to pay an amount. So they have amended law to that extent. So these are miscellaneous kinds of amendment. And one more amendment is in respect of taxes, in respect of services by way of grant of alcoholic liquor license against consideration in form of license fee. All those liquor license, etc., they were already amended. The law was already amended by notification 25 by 2019, wherein it was treated neither as a supply of goods or nor supply of services. Now they have made it retrospective. Though it was amended in 2019, but they have made it retrospective that there will be no tax on this particular transaction. With this, now we will move on to custom amendments, and we will briefly discuss the custom amendment. Very, very important amendment, the first set of amendment under the customs law. They have made various changes in section 2, section 3. They have inserted section 51A, 51B, section 110A. Why all these amendments, series of changes? The purpose of all these amendments relates back to the Supreme Court judgment in the case of Canon India, wherein it was held that the officer of DRI does not have the jurisdiction to issue show cause notice under the Custom Act, because Custom Act is not properly drafted and it does not confer power to the board to assign the functions of proper officers to the officers of DRI. So effectively, there was a Supreme Court judgment in the case of Canon India, which said that DRI cannot issue the show cause notice because the way custom law is drafted, it does not give that power to the DRI officer. Now, to curb that, they have introduced series of amendments. They have amended section 2, subsection 34, wherein they have specifically amended to provide that the assignment of functions of proper officer will be done by the board as per section 51A and 51B, and they have introduced new section 51A and 51B. These sections empower the board, the principal commissioner of custom or the commissioner of custom, to assign functions of a proper officer to any officer of custom. Similarly, they have amended section 3 to include DRI officers under this ambit. So all these amendments together, the purpose of all these amendments is to overcome the impact of Honorable Supreme Court decision in the case of Canon India, which hold that DRI are not the power officers to issue a show cause notice. So to overcome this amendment, they have made this series of amendments. And apart from that, they have made this amendment retrospective. Again, an amendment which is retrospective. Supreme Court, larger bench has held DRI cannot issue a notice. Now we are amending the law and making it retrospective. Clause 96A, validation clause have been inserted, and it provides that all these amendments will be retrospective. So the intent of the government, why these amendments are clear. They want to say specifically that DRI are now the proper officers to issue show cause notice, and whatever they have done in past is legally valid. Now, as a consultant, we all have to analyze all these amendments in detail and see whether these amendments are in fact sufficient to overcome the impact of the Supreme Court decision in the case of Canon India, and whether this clause 96A of the finance bill, which makes it retrospective, is valid or not. So it is something which has to be analyzed in detail, and we will shortly come out with a write-up on this particular topic also. Another important amendment is in IGCR rules. Customs import of goods at concessional rate of duty rules. So these are the rules which are under the customs law. So whenever you are claiming any exemption, notification, benefit, concessional rate benefit, and in case of import of goods, there are certain notification which puts a restriction that you have to follow the procedure which is there under the IGCR rules. So they have amended this particular procedure. Now what they have said is that they have made this procedure automatic and digitized everything. So you have to file an application on the online portal in IGCR 1 format. They will issue you an identification number, and that number you have to mention under each of the bill of entry, and then you have to give a monthly statement. So there is a complete process which they have prescribed under the IGCR rules, and the purpose of this process is to make it automatic only. SEZ Act will be replaced by a new legislation. We all wait what will be the new legislation, what will be the extra benefits which will be given to the SEZ Act, SEZ developers, SEZ units, etc. So it's a big impact. The entire SEZ Act will be revamped, replaced by a new legislation, and we all wait to see what will be the development under the new legislation. So it's a big impact on the SEZ sector. And then we have various rate change, etc. I'm not drilling down into each of the rate change. Solar energy sector rate change, we have change in solar module. Then we have electrical and electronic items rate change. So there is a series of rate change. Various exemptions have been withdrawn, concessional benefits have been withdrawn. So there is a complete list which is available on the website which deals with various rate change. With this, we end our presentation on the various amendments proposed under the GST and Customs Act.